Now, moving on to our next dialogue session with the incumbent banks, and I'm very privileged to have with us two esteemed guests from two big powerhouses in the Asia Pacific region. Allow me to introduce them. We have the Chief Digital Officer of the Bank of the Philippine Islands, Mr. Noel Santiago. Bank of the Philippine Islands, or BPI as it is often called, was the first bank in Southeast Asia, having established in 1851 with more than 900 branches worldwide today. It has recently won the Global Euromoney Awards 2020 for the best bank in the Philippines. Incredible history. Noel, in particular, led the launch of the bank's digital transformation initiative in 2016 to help BPI become the bank of every day. He is an experienced regional retail banking professional with over 3 decades of experience of working across the Asia Pacific banking industry. Noel, welcome to you.
Good morning, Rudy.
Thanks, Noel.
What can I say? BPI has undergone a big transformation beginning in 2016. When we started, we started with understanding what we have. We did an inventory of our capabilities. We benchmarked ourselves with the so-called digital banks, and we said, what else? What are the gaps, and what are the things that needs to be put on the table? So in 2016, we started our soul searching. And after finding out the gaps, we took a decision that we will need to do the transformation in order to support the needs of the clients and to grow the bank forward. So in 2016, we did have a few challenges. We have close to 1 million customers in our digital channels. Our legacy systems, our technology platforms are becoming obsolete. So it's a multiple drivers for us to go into this transformation program. But we took the bullet, we bit the bullet, and we said, we're going to create a new way of doing things. We're going to transform the bank. And here we are today. From 1 million customers in 2016, we now have 4.5 million digital customers registered in our ecosystem. We're doing close to 1.6 billion transactions a year. We have close to 140 APIs in production. We're quite advanced now from where we were in 2016, and it's just going to be growing. It's just going to be growing for the next couple of years.
Yeah, interesting, and thank you, Noel, for those very exciting insights, I would say. And we at Backbase are also proud that in a way, somewhere in that journey over the last 4 years, we have played a very important role in some of these growth statistics that you just mentioned. So thank you for that. Along with Noel, I'm also very honored to have today the Vice Chairman and CEO of FE Credit, Mr. Kalidas Ghose. FE Credit, as you might know, is a subsidiary of Vietnam Prosperity Bank, or VP Bank as it is often known as. FE Credit is also the largest and fastest growing consumer finance industry company in the ASEAN region. FE Credit has till date served more than 10 million customers to achieve almost a 53% market share, with over $2.7 billion in receivables and $1 billion in annual revenues. Not only that, Kalidas is also the Division Director of UBank, a digital-only initiative of BP Bank in which Backbase is currently involved. Kalidas is a retail banking and consumer finance veteran with more than 25 years of experience in global financial institutions across multiple geographies. Kalidas, welcome, and it's a pleasure to have you.
Good morning, everyone. It's a pleasure and privilege for me as well. It's wonderful to be with all of you and talk about digital transformation or digitalization as we know. The journey at FE Credit has been a wonderful one. I mean, we were one of the first local companies to start consumer finance, to launch consumer finance business in Vietnam, which is always seen as a very high potential market because of the population size, growing income of individuals, and also because of the digital adoption among the people of Vietnam. One of the highest users of mobile phones, internet connections, social media, more than 65 million social media subscribers. So it was a place where traditional consumer finance grew. But in the last 2 years, or maybe a little more than that, when we realized that the customer behavior is changing, the industry itself is changing of how it is looking at this business, we embarked upon a journey of digital transformation. We took our processes brick by brick. We were a very manual, traditional company when we started 10 years back, standing at dealer outlets and dealer counters and servicing, offering our products and services to customers who walked in to buy an item. From there, last year, we were able to launch a mobile application which a new customer, new to credit without any credit history, could download and obtain a loan, funds into his or her bank account within 10 minutes time and without compromising on the underwriting standards. And that's why when last year we decided to expand our product suite, our offerings, and include a banking service as well, the transactional banking as well as savings account, time deposits, and other banking products, also expand into wealth management or protection. The whole platform was envisaged to be purely digital. Proud to say that today 100% of our customers go through at least part of their journey on our digital platform. Till date, about 10-15%, rising from about 2% a year back, is going through the entire journey, which is on the digital platform, which what we call a happy pass. But we are very encouraged to know and to be confident that the time is not too far away in future when more than 50 to even up to 60% of our customers would complete their entire journey with us, right from the starting point, maybe on a web or meeting a salesperson, right up to the termination of their relationship with us would be entirely on the digital platform. So wonderful journey, great experience in having gone through this journey with our company, and look forward to this discussion.
Thank you, Kali. Again, very interesting insights from your side. I think we all know in Asia, Vietnam is probably the hotbed of digital when it comes to banking and financial services, and nobody better than you to talk about what's happening in the country. So thanks once again, Kali, for those insights. So now that Noel and Kali, both of you have spoken about what your individual institutions have done over the last few years and how you have looked at transformation, I would start talking a little bit more about what's happening specifically in your individual countries and probably broadly across the region. And for that, I would take reference from the Backbase and IDC digital banking report, which we published earlier this year. So Noel, this question is for you. As a part of the same report that I spoke about, we saw that Philippines, in fact, will have a large market share, or rather the largest market share of migration in Asia Pacific, as customers are expected to swing more towards these digital first banks or neobanks, as you might want to call them, which essentially offers a much higher customer engagement. What are your thoughts on this, Noel, especially for somebody who is representing a large legacy and traditional bank?
We do welcome the presence of the neobanks and the challenger banks. They will give the industry a new perspective on how to engage the customer. And as the incumbent banks, do we see them as a threat? Do we see them as a taking away our lunches? I say no, right? They would be complementary. They would be complementary to the things that sometimes the bank don't want to do. The traditional banks don't want to do. They have their strengths. The traditional bank would have their own strength. However, the biggest strength that the incumbents have right now, over and above any challenger bank that will come in, is the richness and coverage of the spectrum from the corporate to the business bank to the retail bank, right? The complete set of products and services across this, it just needs to be aggregated, right? The Economics 101 says the flow of money is going to come from the rich to the poor, from the corporate to the retail, right? So when you start looking at this, the incumbent bank who has the corporate customers there would be able to utilize and optimize those relationships to reach out to their employees, and then from their employees be able to provide the retail consumer services, and then from there it flows down to the business bank, and then there will be this a new commerce that's going to take place. And all of these things that's happening, if you are a incumbent bank who knows how to put this ecosystem together, that will be your biggest advantage, right? The complete set of products and services would allow you to compete and address the challenge of the neobanks or the challenger banks.
Yeah, very, very well said, Noel, and point well taken. And Kalidas, I'll come to you now. And I think your insights around the next question is going to be interesting because, as I mentioned while introducing you, on one hand, you are representing FE Credit, which had some legacy, and you have gone through a transformation. And then now you have UBank, which is, I would say, a complete digital-first bank, right? And when we did our research along with IDC, we also found, and I think you also alluded to that earlier, that the mobile transactions in Vietnam are expected to increase by almost 400%. And from a banking perspective, more than 25% of banks in Vietnam will be actively pursuing modern digital banking platforms. And we are seeing that today. At Backbase also, we are seeing a lot of healthy discussions that are happening. What are your thoughts on this, Kali, and how does it relate to your particular institution as well as Vietnam as a country?
Yeah, I think that's what consumer behavior is going towards. And as business institutions, financial institutions, we got to adapt ourselves to that change. People in Vietnam are now, I believe, touching their mobile phones close to 100 times a day and spending almost 5 to 6 hours on the mobile phone. I believe 3.5 hours actively and 3.5 hours watching content on the mobile phone. So obviously the interfaces or interaction with the customer is moving towards a mobile phone based, either through a social media or a mobile app or maybe a simple mobile responsive website. We are now looking at, earlier we used to send 50 million SMSs, and we used to have in excess of 3,000 people who were only reminding customers by making a phone call to them when we started this business on a very traditional mode. Today, all our customers actually, as part of their journey, download our app. That's how we have now built it into the journey, the customer journey with us, either for a loan or for a bank account. So the e-signing process happens on a mobile app, and that's when the journey starts. What's becoming very important is this, what we call early tenor management. Just when you take, and especially for a loan or for an amortizing installment loan, it becomes very important that we maintain the engagement because the customer is for life. And if we do not build our relationship, then just one transactional loan is not going to get us return even 5% of the lifetime value of that customer. So the engagement process, not just the acquisition, the initial part of the journey, but the engagement becomes very, very, very critical. Now, payments, as you said, that the payment volume is expected to explode. It's actually already started. I mean, the growth in mobile payments in Vietnam is just phenomenal. We are dealing with a few of the payment wallets to interface with them at the back end with credit lines or with debit lines, with bank accounts, with enhanced products. And the number of users and the way that the usage is going on those platforms is phenomenal. And I think payment transition will happen, payment transformation will happen first. But as you know, with respect to digitization, there is not just payments or micro payments, but micro insurance, micro savings, micro lending, all of them have their own role. And one of the things we are trying to do is that once we establish a relationship on any one of these channels with the customer, largely through payments, but also through credit, insurance, that is protection, savings, and transaction, we would like to maintain that relationship and synergize at the back end so that we can unify the journey and build a more sustainable, longer-term relationship with the customer. That is the reason why we introduced the banking services to our lending customers, because we felt that we now need to expand the product suite and the services suite to be able to build longer-term relationship. And our specialization, and of course we see this segment, the segment that we address, the mid to low income customers, both as a challenge and an opportunity, because traditional and incumbent banks, just like Noel was talking about, typically they have focused on a very different segment at the higher end of the income spectrum. We have won this, more or less we own this segment primarily because of our focus on lending, and credit appetite is obviously the dominant need in this segment. But then micro insurance, health insurance kind of products, which are very, very relevant, pertinent to this, to now deliver to these segments over a mobile platform is becoming both a challenge but an opportunity. So customizing the product, customizing the journey, the UX and UI being suitable for them to quickly understand with maybe lower level of sophistication from a financial product complexity point of view. So all of this is becoming important. So yes, mobile is here to stay. It's going to become the key mode of interface with the customer, whatever may lie at the back end, whether it's a social media platform or your own website or mobile app. And delivering your services not just at the front end, but throughout the customer's journey is going to become very important. UX, UI kind of aspects of this whole journey is also very, very important, as is product suite and the back-end platforms, the digitization of the back-end platforms.
Yeah. So if I just try to
if I may extend that, while there are certain play on the micro segment, the micro payment, micro insurance. The beauty of having the incumbent bank, especially on the financial services group, is if you allow a customer to have that digital credentials that is recognized within the financial services group, the ability to onboard that customer across the whole suite of products offered from the group. Let me give you an example that we just did last year. Our digital customer in BPI is now able to be onboarded in our trade BPI trade platform. The ability for them to do a quick onboarding so that they can do their trading and securities relationship, capitalizing what the same credentials that they have established with the bank. That's number one. Number two, the ability to cross-sell insurance product. Right? We do have a subsidiary that sells life and non-life insurance. That ability to be able to reach out to them and says, hey, this is an offer, right? We know who you are. Just say yes, this is the offer. We debit your account and you can avail of the product seamlessly. Number three, our ability to onboard investment, wealth management customers. They can now easily open a wealth management account using the same credential. And that's just within the BPI ecosystem. So as we continue to capitalize on that, this is the same credential that we're offering to our partners. Make it more open, right? As a prelude to open banking. We give it away and says, this is our customer base. We have 4.5 million customers. What can you do for them? How can you enrich their experience, right? So the bank owns that digital relationship, but we don't necessarily be the one offering the products and services that they need in the future. So we're a bit open on that. We recognize there are needs that we cannot fulfill, and so be it.
Yeah. So if I listen in very carefully to what you said, Noel, as well as what Kali you said earlier, there are two very broad themes that are coming out. One, I think Noel mentioned it earlier, is around the ecosystem, right? Because again, as traditional banks, you cannot have a very traditional view of the ecosystem. That I, as a bank, will try to own everything. I think that is definitely has to change. And Noel, that's a good input. And Kali, if I remember what you said, and it came out, I think, multiple times, is this thing about life cycle. That can you embed you as a bank across a customer life cycle and not restrict yourself to, let's say, one product or one particular journey, right? So I think these are very important insights that not only traditional banks, but even new banks who are trying to launch and start operating, they need to keep in mind. So my last set of questions, and this is the same question that I would like to ask both you, Noel and Kali, and probably Noel, you can go first, is that we spoke about a lot of these shifts that are taking, right, in terms of consumer mindset, in terms of technologies, in terms of ecosystem, as we all mentioned. Now, giving all these shifts that are taking place and more that are expected to develop over the next few years, from two perspectives. One is, what does the overall outlook and prediction for banking look like in 2025? That's at a very holistic level. And then to achieve that outlook or to achieve that prediction that you might have, what are some of the strategic priorities that banks or financial institutions in Asia need to look at to prepare for the future? So it's probably two questions, but bundled into one. Noel, you can go first, and then Kali, you can add on to it with your thoughts.
The emerging trends that we're seeing right now, right, is both driven from, it's many drivers, right? Driver number one, the regulatory framework regarding digitalization in the country is evolving, right? Together with that is what comes after that is the security, regulatory controls, fraud, standards, how are you going to be managing this? Payments, real-time payments is just in the horizon. So this driver, the environmental factor, is going to force the bank to say, what are the things that's going to happen, right? Some banks will respond and says, we think this is what's going to happen, therefore we're going to build specific pillars for that. There will be banks who will be more prudent and says, look, before we commit doing anything, let's wait and see, right? But there will be banks who says, what I will be doing is I will build a foundation of capabilities that would allow me to respond quickly, regardless of what happened, right? There are new players, open banking is going to come in, challenger banks going to come in, a new category of digital bank is going to be put in place, right? New products and services that will come out of all this, right? No one has a crystal ball to predict what products and services that you need to build. But what you can build on the third category of banks is I will build that capability first, right? It's like creating a set of Lego pieces that if this thing happened, I just assemble something and I'll be able to participate. Right? And that's what I believe in a bank like BPI would need to do, right? We're one of the largest in the country. 3 out of 10 pesos spent in the country is coming from our customer. We're well entrenched, both in the retail and the corporate side, in the business bank side. So we cannot anticipate everything that will be happening across this various segment. But what we can do is build the layer underneath and says, anything that happens between this, we're ready to respond. It may not be on day 2, but it will not be in months or years, right? It will be in a matter of weeks. So that's where our focus is going to be. And I guess a bigger player would need to consider that.
Yeah. Kali, so before I come to you, I think what you're trying to say, Noel, is build the foundation, right? So that the basic building blocks are there. And when you need to react, you can react quickly rather than, firefight at that point of time. Something similar to what you did in 2016, so that you are prepared for 2020, what is happening globally right now. I think that's what you're alluding to. And it's a very, very insightful point as well. So Kali, your thoughts. What's your overall prediction for banking, and how do you think banks need to react and prepare for the future?
Let me focus on probably the segment and the customers and products and services that we are focusing on ourselves. And I'll take off from maybe two parts of the conversations from before, what you said and what Noel said. What you said is very important for us, is to look at how do we embed ourselves in the customer's life. And that embedding process actually happens over various time frames. It could be mapping the customer's daily life from the time that he gets up to the time that he goes to bed, and make sure that all the needs that has a financial requirement, whether it's making a payment or taking a loan or debiting his account, or maybe even making a micro investment or a small protection product. All of that is embedded as micro journeys, which are built like connecting the dots from a flexibility, convenience to the customer point of view. And that could be over a monthly cycle where there are some monthly kind of cycles that you follow. And there could be a life stage, which is over a much longer period of time, maybe 10, 12, 15, 20 years. So in order to do that, our approach has been to build on one at the front end, sort of integrations, which is probably now on a more fancy term called ecosystem, but essentially make sure that whatever the customer requires to go through his daily life or his monthly life cycle or even his life stages across his whole life is able to conduct those transactions. So similar to what Noel said, is to build the capability. And the other side of the capability is at the back end. A few years back, for example, when we started, we used to have verticalized systems, one for loan origination and the other for lead management and another one for collection, et cetera, et cetera. But a few years back, as part of our digital journey, we horizontalized those systems from those verticalized individual function-oriented systems into a customer journey platform. And that has now enabled us to actually partner with new technologies, new organizations which are trying out new business models to be able to offer our platform to them. So on one hand, we are building a front-end ecosystem that is helping us to embed in the customer's life and conduct as many journeys as we want to do, whether it's a micro journey or journeys over a longer period of time. And at the back end, we are creating a technology platform that is able to conduct or execute journeys or new business models as and when we require. So the combination of this is essentially an open banking platform that is capable of orchestrating a journey. And we follow the way of creating an ecosystem which is through the orchestration route and not more from an ownership or a self-creation route, because obviously it has to follow different market situations and market context. The Vietnam market, we believe, is more suitable for orchestration. And that's where I think the banks will make a difference. Those banks which can add value to a customer's relationship with them by embedding themselves in the customer's life. As you know, UBank's motto is bank less and do more. And I think that's the driving philosophy, is to make sure that banking becomes simple for a segment, but at the same time, they can access some of the more sophisticated financial products suitably structured for them, suitably customized for them, but with the same degree of ease and convenience as probably higher income segments would have been able to do early. So in other words, bring sophisticated financial services down to the mid to low income customer segments as well by using digital platforms for both delivery but also economics, for making it more efficient and more effective. So I think banks which are able to play this game successfully, at least in our segment, will be the ones which will probably be the winners of the future.
Yeah. And I think it's music to somebody's ears like me, who is representing a platform which does this orchestration. And you spoke about orchestration, right, Kali? And I think that is where the differentiation will come out. How well are you being able to orchestrate the engagement for your customers? And that's a combination of multiple factors, right? Your ecosystem, your customer life cycle, all of that put together. So Noel and Kali, thank you so much for taking time and giving these insights for me as well as for our audience today. I'm pretty sure we have all, from a knowledge perspective, much richer listening into your experience and your insights. So thank you.